Buying a home in Canada is about to get way easier for a lot of buyers, especially in markets where many homes are priced over $1 million. Upcoming mortgage rule changes are going to allow Canadians to put down over $100,000 less to qualify for an insured mortgage, and many buyers will have the option for a longer amortization period. But is this actually good news for the market? Or is it a red flag? In this video, we'll go over a couple of those significant rule changes for mortgages in Canada, what they mean for you, and what they could mean for housing affordability. Beginning December 15th, 2024, big changes are coming to the minimum down payment required to qualify for a mortgage on homes priced over $1 million. Currently, to get a mortgage if your purchase price is over $1 million, you're required to put down a minimum of 20%, which is $200,000 or more. But after December 15th, that amount will be significantly less. But before we get into how much less, I'm Tyrell Boake, a realtor in Kelowna, and on this channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If this is something you're into, hit the like and subscribe buttons so other people like you can see this video too. And if you'd like to book a call with me, hit the first link down in the description to book a time that works best for you. Under the new mortgage rules, the threshold for a 20% minimum down payment is being increased from $1 million to $1.5 million. The new down payment rules break down to 5% down on the first $500,000 and 10% on the balance up to $1.5 million. Under the new mortgage rules in Canada, the minimum down payment that you're going to have to put down on a $1 million purchase is $75,000. And now keep in mind that these are the minimum down payments. You do still need to qualify for that mortgage to qualify to put the 5% down. At $1.1 million, your minimum down payment's $85,000. $1.2 million, you're looking at $95,000, and all the way up to $1.499 million on your purchase price would require you to put down about $125,000. Let's contrast that to what the current plan is heading up to December 15th, 2024, and what we've been under for the past few years. On a $1 million purchase, the minimum down payment you required was 20% down, which was $200,000. Just on a $1 million purchase, you can see that the difference is $125,000. And if we go up to, say, a $1.3 million purchase price, the minimum down payment after December 15th will be $105,000, which is a $155,000 difference from the 20% down payment you would have had to put down on minimum under the old plan. This is obviously good news for not only first-time buyers who maybe have the income to support buying a higher-priced home, but not a large enough down payment to qualify, but also people currently in the market who are looking to upgrade. Maybe they have had the ability to save 10 to 15% down through their savings or the equity they've built in their current home, but just couldn't get to the 20% down previously required. Now, they'll have the ability to maybe buy that home that's over $1 million that was previously out of reach. In the short term, this will be a solution to housing affordability. But this segment of the market is already one of the busiest segments, especially in my market of Kelowna, where a big majority of single-family homes and townhomes are selling between $800,000 and $1.2 million. These mortgage rules are now going to introduce even more buyers into that segment of the market, and if we aren't creating more supply to compensate for that increased demand, this will lead to upward pressure on prices in the long run. But let me know what you think of this rule change in the comments below. Is this a solution to housing affordability in the long run, or will it make prices go up? The other major change coming to mortgage rules in Canada is an increase to the amortization period for first-time buyers and new construction. This is obviously going to have a positive impact for first-time buyers as they will have the ability to qualify for larger mortgage amounts. Stretching the amortization for 5 more years will increase their buying power and give them the ability to qualify for more. This is great news for first-time buyers looking to get into the market. And expanding the amortization period on new construction should give more people the ability to buy brand new homes if we can convince builders and developers to build more. Housing starts are starting to rebound in Canada, but they still aren't at the level required for recent population growth. So what does this mean for the Canadian housing market? In the short term, it should help buyers and add some life back to the real estate market. According to this article written by Cindy Freeman for Real Estate Magazine, new mortgage rules set to spur market recovery, but impact may be short-lived. Housing industry experts agree the new mortgage rules taking effect on December 15th, 2024 will have a positive impact on the road to recovery for the Canadian housing market. However, their effectiveness may be short-lived. And as we mentioned before, the two key changes introduced by the federal government are expanding access to 30-year amortizations and increasing the insured mortgage limit to $1.5 million. And according to TD economist Rishi Sandhi, these changes are expected to fuel some activity. These two new changes offer somewhat of a catch-22 though. While they help more first-time buyers enter the market, the resulting demand will likely drive prices higher, reducing affordability once again. However, according to Ron Butler from Butler Mortgage based in Toronto, buying power of buyers could be increased by 12% for some Canadians. Ron goes on to say that Canadian insurers estimate that these two changes could lift buying by about 12%, 8% by extending amortization for 30 years, and 4% by raising the insured mortgage cap to $1.5 million. When it comes to buyers, any movement, even incremental, is positive news. In the short term, these rule changes are going to help more buyers get into the market and make homeownership more accessible. What it means for pricing in the long term, we'll have to wait and see, but I have a feeling it will eventually put upward pressure on prices again. And if you'd like a step-by-step guide to buying your next home, check out this video right here. Thanks for watching. We'll see you next time.